Welcome to a special series called The Global Crisis Monitor, featured on the Treasury Update podcast. Thank you for joining. Each week, the Treasury Coalition, a group of Treasury-oriented firms which you can find on treasurycoalition.com, promotes a global survey covering critical issues and responses whenever a significant disruption is underway. This podcast shares key information from the surveys and analysis of the broader market to support the profession in optimizing current response and future preparation. The weekly surveys run from Wednesday through Tuesday, and results are shared each week via a podcast and digital report. Sign up on treasurycoalition.com and take the 5-minute survey each week. We appreciate your participation and teamwork. Special host Meredith Zonsius maintains social distancing by joining a web meeting with managing partner Craig Jeffery of Strategic Treasure to explore the second wave of survey results from the weekly COVID-19 Impact and Response Survey. Topics of discussion center around participants' outlook on the economy across 3 time domains, changes in the sentiment with regard to liquidity, movement of staff working locations, and key activities Treasury is focusing on. Listen in to this brief discussion that covers this current information on factors impacting Treasury and finance organizations amid this pandemic. Welcome back to the show, Craig.
Hey, thanks, Meredith.
Let's get right into the survey. What were the changes in survey questions this week?
Yeah, so for the second week, we added a few questions. We dropped a few as well, so we could cycle some in and out. One of the interesting questions we added had to do with where staff was working from and how that changed. And then we added 2 more time domains to the economic outlook. Those were the top changes for the week.
Interesting. What were the results?
So on the working side, people were working more remotely in the past week. I know it's been, in the U.S., the last 3 or 4 weeks, a lot of people have moved home, but only 9% of firms had the same level of work this past week as the week prior. So that was a pretty minor amount. But if we look at those who were working more remotely versus those that were working more from the office, that net was a little over 80%. Only 3.9% of organizations had more working from the office. On the economic outlook, there was a very strong negative sentiment in the short term to moving to positive as we got out towards a year point. I'll just step through a couple of those. The 2020 impact, the economics for 2020, averaged in the major negative, with almost 1 in 5 viewing it as a massively negative impact on financials for the whole of the year, which is not too surprising given perhaps the lost couple of months or very diminished couple of months, depending on the industry. So as I mentioned, we added 2 more time domains to this week's survey. We had a 3-month outlook, which was significantly bearish, and we added a 12-month outlook, was certainly bullish, but by a moderate amount. So if you look in the shape of 3 sections, what's the same, what's positive and what's negative, it was very, very uneven. There were 6 times more negatives than positives, and only about 1 in 15 companies identified that it would be about the same. So with our 1 to 9 point scale, with 5 being the midpoint, it sat on 3.6, which is, as you could tell from the other numbers, significantly bearish. On the 12-month outlook, it looked more like a barbell. The middle section was about 1/6 of companies thought it would be about the same. We were about 1.35 times positive versus negative, or you could say, somewhere around 4 to 3 positive to negative. And in terms of the 9-point scale, it sat just over 5.41. So this looked more like a barbell with the positives outweighing the negatives. As we looked at that, Meredith, it seemed to indicate, as we looked at all of these different measures, that the consensus view is somewhere around 7 months to turn positive. So that indicates maybe a November timeframe when everyone expects things to turn positive.
Stepping away from our podcast discussion briefly, we wanted to encourage you to take the Global Crisis Monitor survey repeatedly while it's live. It runs from Wednesday to Tuesday every week. You can go to treasurycoalition.com and follow the links. Add your voice and insight so that as a profession, we can take positive and knowledgeable steps to move our organizations and nations forward. Invest 5 minutes each week at treasurycoalition.com and get great information and insights while helping our profession and organizations. Now back to the podcast episode. So liquidity was an important issue last week with AR being hyper negative. What happened this week with those numbers?
They stayed hyper negative in AR. It was still the worst, top concern. 6 times more companies saw a deterioration in their outlook. So there's a very negative expectation. The line of credit perspective, I'll talk about a couple of the changes or if there's a note. So line of credit, it went from kind of the neutral category, slightly negative last week, to slightly positive. So that's a change for the better. That's one of the few bright spots. Central bank support for banks. So like the Fed, for example, that was 3 times more positives than negatives. And last week was positive as well. So that's looking good too. Covenant compliance and concerns about that. That was negative last week, and now it was 1.5 times more positives than negatives. That's a good change.
We like to hear those positives. Let's go through the results of the changes in the outlook on a week-over-week basis. What are the changes?
So this is the one where we looked at the inflection point for the impact of the virus would start to diminish or decrease. The end of the health issue caused by COVID when it would not be deemed significant. And then when we reach financial normalcy. So the inflection point was viewed as being a little bit closer, somewhere on the very short end of 2 months or just beyond 1 month. That advanced and improved about a week since the last week time. So the view of the inflection point is roughly held the same calendar date. The end of health issue extended. That extended much closer to the 6-month period. So maybe the lower end of 6 months in that time range, so above 5 months when it was sitting out there. So it's added a couple weeks. So it's gotten a little more negative on what will happen there. Financial normalcy pushed out from the 5.5 month time frame to solidly into the 7th month category. So that ties into some of the economic outlook things as well. So that's where that's at, Meredith. Mostly negative outlook on that.
Mm-hmm. Let's end with what people are focusing on.
Oh, that's a good one. This is, I think, very useful for what do we do with the information that we're looking at. So there's one real major theme and then 3 moderate ones. The major theme is cash is king. And before you turn off the podcast, I mean, what we mean by that is there's elements about people securing short-term loans, drawing their line, adding an extra month's worth of cash needs into their accounts, building balances, et cetera. That's one aspect of just adding to liquidity. The other aspect of cash is king is focused on forecasting, monitoring, kind of adding where we talked about some of the financial modeling last week. The other elements were communication, cross-training, and digital signatures. Communication was with the staff, all the internal communication, monitoring what's going on, communicating across the board, but also external communication with key customers and their banks. The digital signature side, people are using that to adapt to process and improvement. So that followed up with the security issues we saw last week. So people are certainly figuring out ways to get approvals done that might have been done manually in electronic format in a simple way to go. The biggest one to watch, I thought, was cross-training. That showed up a lot of times where people are writing it in, what they were doing. They're getting cross-training, and definitely a good plan to have, especially if people become sick, unable to do their roles for a while. So when we look at this, that makes a tremendous amount of sense that people are fortifying their cross-training or doing it if they hadn't, getting prepared for this ahead of time.
Excellent. Craig, thanks for sharing this information. To our Treasury Coalition partners and survey respondents, you have our hearty thanks. And to our listeners, thank you for joining us again.
This podcast is provided for informational purposes only, and statements made by Strategic Treasurer LLC on this podcast are not intended as legal, business, consulting, or tax advice. For more information, visit and bookmark strategictreasurer.com.